what are we doing? And again, do your own research, do your own stuff. We're just giving you some degenerate
We don't
ideas.
know what we're doing.
We're complete degenerates. It's in the name. We don't know what we're doing. We're just degenning in, aping in, doing dumb stuff. But we're learning. Interesting. But this is what we think.
Yeah. And interesting what we were saying before about the feeling of going through this. And we've seen it happen before. We can look back at charts and go, oh, when things have crashed, this is what's happened. But it's great when you're in the market and to think and really reflect about how the sentiment and the feeling is of the market. It's bearish. Things feel bad right now. So when things continue to go down, this is what it feels like. It feels like, and some of the thoughts you might be having, maybe crypto is a scam. Maybe I have been tricked, and depending which coins you bought, you might have been.
Yeah. And so if we take a step back and go, well, actually, what's the best way to look at it? Firstly, what's the bloody difference between the coin that you bought in January compared to the coin you bought now? It's going, well, the price is totally different, but what's the actual utility? What have you looked at the founders of it? Have you looked at the tokenomics? Have you looked at the narrative, the team, everything that goes with it? Is that still the same? Yeah, that deep dive. Is that still the same? Regardless of the price, is that still a quality project?
Well, this is why you need to keep looking at stuff, right? Because because it could change. And a good example of that is Phantom, which was a really good. Phantom had a great narrative, right? Phantom, the blockchain, FANTOM, and they did. It was one of their co-founders left the project, and the narrative spun quickly. Phantom was like an up and coming. This is one of the best blockchains. Yada yada yada. I was really interested how easily that flipped just with a co-founder came out.
Yeah.
So it's important to stay up to date with this stuff.
Yeah. Well, obviously with Luna, they lost the pegging, exit out. So they're important. And then I think the other thing is from an investment point of view. Don't ever invest more money than you have. Just as basic. I mean, even with me getting slightly wrecked with Luna, it was from profits.
Yeah.
So I didn't have my original capital in there, right? And I got a bit fortunate there. But for God's sake, even if you see Bitcoin at 19,000, don't go super over leveraged or lend a ton of money.
It could go lower.
Yeah, you should only ever invest what you're able to lose. I think that's a big thing.
Yeah.
Really, you got to think about it as all this money could be gone.
And so your experience with Luna, what will you be doing differently in the future? So,
firstly, what I'll be doing is, we first said about the actual, the coin and everything happening there. Do your research on, deep dive on what's all happening there. And then, okay, tick that's fine. If I'm going to buy something, firstly, it makes sense, but just to reiterate, we want to buy when there's max pain. You make your money in the bear market.
Yeah.
Ideally. Yeah. Buy at the bear and then sell in the bull market, right? Just as simple an overall thing. It's simple, but it's so much harder. It's easier said than done. So, but what I'm going to do differently is that if I'd bought, say, $1,000 worth of Luna and I'd bought it at $50, I thought that's a great buy, $50. That to prevent this huge amount of hurt that a lot of people have experienced, if I've bought it at $50, I'm going to have an automatic sell order in there at, say, $40, right?
A stop loss
in there, right? So you can, whatever percentage you want, I mean, you could, that's at 20%. So you could have it 20% there, you could have 10%, whatever you want, but you could have it there a price where you feel, you know what, if I sell there, that's not that bad. I've lost 20% there. It's fine. It's not too bad. And then from that, you sell it all and you're going, okay, I'm just going to cut my losses, because that 20% loss that you've made there, that's a whole lot better than if it absolutely tanks, right? And then you can then buy back in at a better time in the market, right?
That's around risk management.
That's a risk management way to do it. Not very degenerate of you, but that's probably a safer way to do it. Of going, well, I believe in this project. I think it's great, but I've bought $1,000 here at $50. I'm going to have the whole thing being sold at $40. Okay, if it goes there, great. I'm going to look for a better time to re-enter the market. So I'm mitigating my potential losses.
So that's if it's going in one direction.
Yes.
What happens when it's going the other direction?
Great. So we've mitigated our potential losses there. Hopefully we've bought pretty well. It's at $50. And then now we start going up. So the big thing, like this whole thing about HODL and diamond hands, yes, we've got big time horizons. Yes, we're looking at a greater time horizon, even though crypto is super volatile. We're looking at this 5 to 10 year time horizon.
Yeah.
In saying that, this idea of hodling is just simply dumb. It's dumb. It's dumb.
Push back on that a little bit.
Yeah. It's dumb because it depends on the type of coin that you're getting, obviously. But a lot of stuff, like my view on Bitcoin. Never held on and don't going to hold on. I just don't think it's a great return on investment.
Yeah.
But if you're doing those altcoins or those mid-range coins and stuff, the volatility is that you need to take profits along the way, right? It's that if this thing, and this is just a real safe way of doing it, but say your coin that you bought at $50 has gone to $100, right? You've 2x'd your money. A safe way is if you take 50% out, you're taking your profit there. So you're taking 50%. So you've taken out your original capital, right? Yeah. And then you're just playing with the house's money. And then if it goes up another 2x from there, so 4x from your original, then you could take another 50%. And you take profits all the way up in the same way that you buy all the way down. So people could start buying now and they're going to buy all the way down to the bottom, for example.
Yeah.
Because you want to buy into the bottom and you want to sell into the top because you're never going to know where the bottom or the top is. That's because at the end of the day is that, yeah, sure, you go, well, Tom, but what happens if it goes to $5 and it 10x's? Well, you're selling all the way in there and you might, hopefully you're not going to be doing too much buying in there and you've got enough there previously, but you might not sell at 50%. You might say, I'm going to wait till it's 3x's to sell 50% and then I'm going to do whatever ratios is your risk appetite in there.
Yeah.
But the idea is that you accumulate wealth. Yes. People have got this fantastical idea of that they're going to make a huge amount of money in a year. That's just not how it's done. The great Warren Buffett, wealth isn't made, it's accumulated, and it's done over a lifetime. And Warren Buffett's fortune wasn't made till after he was 60.
Yeah.
Right? It's like this idea that you can just make a shitload of money unless you get real lucky with minting an NFT or whatever.
Yeah.
That's just not the real wealth in my mind. So you've got to accumulate slowly, and part of that is taking profits. And my old man did a great job there.
Yeah.
and I did the wrong thing, right? Yeah. Like when Gala went to 80 cents, and I said he didn't know what it was, and I told him to get in there at 1.7 cents.
Yeah.
The old man's like, I'm taking the profit.
Good idea.
And I'm like, I think this thing's going to go to the moon. I think it's worth $2. He's like, I don't care. I'm taking the profit. And he took it in December. Yeah. The OG, mate.
Yeah.
And he just told me yesterday he bought in at 5 cents. That's the way to do it,
That's
right?
The way to do it. Yeah.
He just bought back in at 5 cents and he's taking that huge profit out at 80 cents.
Nice one, Craig.
Because stuff is going to go up and down. Yeah, shout out to the old man. Wisdom right there. And look, that's just my view. That's what I'm going to do. Do your own thing and whatever and work out your percentages. But I'd literally do up a spreadsheet of the percentages that you are going to take profits on when it, 2x's or whatever.
Before
play with the house's money. Don't play with your own money. And again, I guess it worked out for me with Luna. I wasn't playing with my own money.
Yeah.
I was playing with the profits.
Yeah. I completely agree. That's a really good strategy, which I'm going to do as well. Where I was pushing back on is, that sounds like a lot of work, Tom. Got to do spreadsheets. You got to keep checking the market.
What the fuck do you think this is? Do you think making money is easy and free? If it was easy, everyone would do it and everyone would be rich.
Look, what I'm saying is that there are people that hear that and just turns them off.
Well, they shouldn't be in investment then. Like, investment is risk. If you don't want to swallow some risk, then go play in the playground. It's not for you.
I didn't necessarily say they didn't want to swallow the risk, but they didn't necessarily want to do all of that work.
Well, then it's luck. Go to the casino and gamble.
See, I don't think that. I think that there are some projects, like I was hinting at earlier, like a Bitcoin, like an Ethereum, that you have strong conviction in long term.
Yes.
And look, we're degenerates.
Yeah,
not everybody's a degenerate.
And you can get like a 2x return. That's why I don't have Bitcoin. Yeah. You buy at 25K, it goes all the way up to 50K. There's 2x.
But like, that's in traditional markets, the 2x returns are pretty good deal.
That's true.
Like, pretty good. And you can have a high level. Well, I have a high level of confidence that Bitcoin will get to at least 100K eventually. I don't know the time, but eventually.
Yeah.
Like a high level of conviction. I could be wrong, but we'll see how that plays out. But if you were listening, you're like, that sounds too much. I don't want to keep checking. I don't want to do all that. But you...
Okay, invest in your super, go play in the kiddie pool, and just get Bitcoin and Ethereum.
Well, yeah, you could get these quality projects and just hold them. And if you're, like we were talking about with our friend, Darcy, if you're happy to just go, hey, I've got other stuff going on. I don't want to like be looking at this stuff every single day. You go, I want to buy these quality projects that I think have long-term growth.
Yeah.
And you go live your life, and then you check it like 6 months later. Oh, where's this at? And you go, oh, maybe it's down a bit because you didn't do all of those things. Take those profits and, have effective risk management.
Yeah.
There are opportunities that's why crypto is so great. You can be a degen like us and do all of this stuff, and that will give you a better chance of making a lot more money. But I think there is a pathway, in my opinion, that if you're not that into crypto, if you're not that into investing, there are people who are just I don't care about money, yada, yada, yada. But they still want to make more money, protect their wealth.
Yeah.
You could do that with buying into something like Bitcoin, especially at the lows. Like you buy it close, high on the fear, it's been smashed down over 50%. Like you buy it around now, you check back in 5 years, regardless of where it's at in the market cycle, I think definitely it'll be higher.
Going for a run once a week, once every couple of weeks is good. Yeah. I encourage you. Go for a run. Mm-hmm. But you're not going to get fitter.
You'll get a little fitter.
You get a little fitter.
Yeah.
But you're not going to get fit.
Yeah.
Right? In the same way that absolutely buy some stuff. Good. You can do it. But you're not really going to accumulate much.
But I think if you're thinking about investing into crypto, I think that's a good question to ask yourself. What type of investor am I?
Yeah, what's your risk appetite for sure?
Exactly. Am I the set it and forget it type investor? Which they've been profitable. You just follow a strategy, DCA, dollar cost averaging. Yes. I'm just going to buy Bitcoin every week or Ethereum every week. I don't care what the price is doing. I'm just going to keep buying. It'll go up. I'll capture those gains. It'll go down. I'll get it on the downtrend. And when it goes up, I'll capture the gains, but I'll keep buying it.
Yes.
So,
not very degenerate of them.
Not degenerate at all. And they're better, but I guess it's all about personal choice. Of like, it takes a little bit of time to do this properly. Like,
and that's exactly my point.
Yeah.
Like, if you're not going to put the time in, and you think you're just going to get rich and just hodl and not really understand the markets and not put the time in, then it's going to be like anything else that you don't put the time in. You just can't expect the returns.
Yes. Yeah, I'd agree with that. You get better returns if you put the time in.
That's it. Oh, that's some life advice for all the people out there. Mate, do you have anything else that you want to add in what you're doing, what your strategy is at all, mate?
I echo a lot of the things you said, and the best way to learn is through pain. I think diversification is a great way to kind of protect your wealth, but also potentially get more wealth, right? So I'm not just going all in on one coin or a couple of coins.
No.
I'm going to start looking at some NFT plays. We've already got a few different NFTs. So here's a thought. The crypto gaming market is smashed right now.
Correct.
And there are some NFTs that are already out on marketplaces for these games in the future. And even coins of these games that are coming out in the future that aren't out yet. They've got no or little utility. So you could look at Star Atlas ships. You could look at Mirandus exemplars. You could look at like a few different Miranda's land, even like there are a few different things that are pretty cheap right now.
Yes.
So you could start diversifying into this stuff because NFTs are on like a different market cycle to crypto.
Yeah.
So diversifying into that, other assets probably too, but I think I'll probably stick with the NFTs and the crypto and just do effective risk management, like you just said, effective risk management and profit taking. And when I've done it in the past, it's worked really well. And then when I don't do it, it doesn't work that well. So just do more. Do more of the things you should be doing, right?
Put a bit of time in, absolutely. And diversification is key there. Shout out if anyone wants to understand more about that. Ray Dalio's book Principles talks about that. And that's one of the big key changes that he did to be one of the world's largest fund managers. And the yield is exceptionally better with diversification. That's a big part of it, absolutely. It's going to be interesting to see what happens in this crypto gaming space. Obviously, we've got Illuvium coming out soon and different things like that. But there's going to be some great buys coming up. And I know everyone goes, everyone in crypto is always positive and stuff like that.
Reframe it. It's always a buy.
Yeah.
Don't buy all the dips.
But hopefully all you listeners out there weren't buying in much in the last sort of 6 months and really weren't buying in that January, February time at the top. So you've got to understand the cycles and holding onto your money. That's why you take those profits, you hold onto the money and you wait for the bear market. And, those cycles are getting smaller, but that's what the good investors are. Raoul Pal talks about waiting for years to see a market cycle turn around. And you've really got to be quite disciplined in this space if you're going to do it that way.
And that's why I actually think that it would be worthwhile, in my opinion, to keep your eyes and ears onto this stuff that we're talking about right now. Because one of those opportunities feels and looks like it's coming up pretty soon.
Yeah, and then in that gaming space is only the good things are going to survive.
Yes.
Like that's one thing in a bear market is going to flush out
terrible projects.
The shitty projects, right? So a lot of stuff is going to be built in this bear market. We're going to see huge utility come on, especially in the gaming industry. So I'm excited because, you can't just put up a thing because it's hyped and people buy it because of the marketing. It's got to be actually have good utility and it's going to provide some value.
Yeah.
So really have a look for some good quality projects out there that you're willing to take a risk on.
Yeah, I like it.
For sure.
Sounds good.
All right, guys. Well, thank you for tuning in. That is the Degen Den, the Degen Den. It's a hell of a thing.
It is. I like it.
That's it, guys. So
Episode
stay tuned. Episode 4. We've got 5 coming out soon. All things Illuvium with the upcoming land sale. We'll see you then.